Uh,
Okay.
I'm going to hit record. Oh, thank you, Tracy.
Yeah, I was like, I'll go ahead and get that going. So welcome, everyone. Again, I'm Tracy Irby. I'm the director at the Center for Women Entrepreneurs. So glad all of you are here with us tonight. This is our second in our session. Lourdes Ramboa is here as well. She is our Associate Director of Business Development. I'm happy to say everybody has got their information in. Your requests have gone out. We need a lot of signatures on that, though. And from the time they get that, you should get paid within 30 days. But usually, our grant winners, they try to pay quicker. So I can never give you an exact date, but I can give you progress updates as to where they are. Uh, so with it, we'll go ahead and get started. I do want to go around the room again, where everybody just quickly introduce themselves. Just say your name, your business, and where you are. I know our speaker will like to hear that as well. So Rebecca, he wants to start with you.
Sure. Yeah. So Rebecca Staley, I was U.S. Navy, and my business is it's called Aquarial, and it's basically oil and gas investing, and trying to basically create kind of like a private equity structure for investment vehicles.
I
Oh,
love that.
and I'm in Houston, Texas.
Okay. And I guess I should have added too what you're using the funds for because you have an interesting project. So,
Oh, yes. Using them for oil and gas accounting software. So usually there's when uh, when you have kind of revenue statements and bills from operators, you sort of are very limited using QuickBooks, so you have to use kind of a more specialized accounting software for that, and it's not cheap. So that's what I'd be using it for.
that's great. Thank you. Anitra. There she is. You're muted.
I am Anitra Briller. I reign from the beautiful city of San Antonio, Texas. My business is After Forever, and we provide personalized pre and post services and products, burial services and products for individuals and their families. I will be using the funds for marketing, educational workshops, and enhancing technology and software.
Great. Thank you. All right. Amy.
I'm Amy. As a U.S. Air Force. I own a coffee trailer or soon to be brick and mortar. And I am using my funds for a larger espresso machine. They are not cheap, and so that will be helpful to go towards it.
That's great. Thank you. And you are our neighbor and live in?
Oh, I live in Argyle.
Yes.
Yes, I am a neighbor of Denton.
Yes. So glad you're here. Thank you. Dr. Aisha.
Hey, good evening. Dr. Aisha is not available tonight. She was on the call earlier, but just stepped back in to see some of her patients. My name is
Okay.
Wyatt, and I'm the ops manager here for Spinally. So she will be catching up on the recorded version of the videos probably tomorrow. But we are a chiropractic office located in McKinney, Texas, and we specialize in the Gonstead chiropractic method, and we will be using the funds mainly for marketing materials as well as community involvement with the Chamber of Commerce and the Rotary Club.
Great. Thank you for joining in and letting us know.
Thank you.
I know she works long hours.
Thank you.
All right. Okay. Um, Lourdes, I'll turn it to you for a minute and I'll let you introduce our speaker for the evening.
Yes. So tonight we have the honor of having Mr. Winston, is it Lab?
LeBay,
Winston? Labe?
LeBay, LeBay.
LeBay. LeBay, I'm sorry, LeBay from the Small Business Administration, who will be sharing with us some information about access to capital. So, Winston, I'm going to turn it over to you. Let you introduce yourself, tell us a little bit about your background, and kick it off from there.
All right. Well, thank you so much. I appreciate it. It's an honor and a privilege being here with you all this evening. It's my passion is to help small businesses. And so, again, looking forward to covering some information with you guys. I am a veteran, Army veteran, 4 years. And I was a commercial banker here in Houston, Texas for 25 years, commercial lending. And I've been with the SBA 6 years, and this May will make 6 years. So I'm the deputy district director. If you ask what that means, basically I'm like the COO of the SBA Houston office, or the chief of staff, or however you want to say that. But the main thing is we get out, we do trainings, outreach, and just making sure that we spread the information about the SBA and our resource partners, which I'll cover all of that in this PowerPoint presentation. But as I said earlier, before you guys logged in, I stand between you and you spending time with your family. So I will make sure that I cover the slides. I won't get too deep in the weeds on some of this, but if you have questions, of course, there will be times for questions. But again, if you see me kind of go through a slide, and not really cover it line by line, I don't want to bore you guys. So we'll go that route. I'm going to go ahead and share my screen now, if that's okay. Let's do that. And let me know if you can see it. Good deal. Perfect. All right. Well, we get started. I apologize. My screen is over here to my right, so I'll be back and forth. What I will do, however, is as I cover these slides, I may stop and pause and see if you have questions, like maybe halfway through, and then finish the rest of it and have some Q&A after that. So we will get started here. All right. So the SBA was established in 1953. For the purpose of helping Americans achieve the dream of small business ownership, either by starting your business, growing, expanding, and also recovering. And you may ask, what does it mean by recovering? We do have a department within the SBA, the disaster office. That is the office that will loan money during a time of disasters or crisis. My office, which is one of the district offices, we have 68 district offices around the country, including Puerto Rico. Mine is the Houston district office. So we don't loan money we call the field offices. We don't loan money from the field offices, but our disaster office, they do loan money directly. So that is the only time you will hear someone say, oh, I called the SBA for financing. That's the only time. Otherwise, you would go through a bank or a credit union, any participating lender. And in the interest of this presentation tonight, I may use the word lender, which means bank, credit union, any approved lender. Okay. So the district office, Houston, we cover 32 counties. I heard some of you mention McKinney and Argyle and San Antonio. So those locations that you all mentioned are covered either by the San Antonio district office or the Dallas district office, but that's okay because we collaborate with each other all the time. What you see in front of you on the slide, that's the 32 counties. So as you can see up north, the furthest we go is Angelina, which is that Lufkin area. Kind of Nacogdoches borderline, but I think Dallas district office covers Nacogdoches, but we do have some kind of share some part of that. Then over to the Texas-Louisiana state border, as you can see, Newton and Orange, County, Jefferson, which is all Beaumont, Port Arthur area. Down to Matagorda, which is Bay City. If you're familiar with the Houston area, the Bay City, which is further down, that Matagorda area, Brazoria County. I'm in Fort Bend, that's where I live, which is Missouri City, the Sugar Land area. And then over Milam to your west, which is Rockdale, we got Bryan College Station, Brenham. So that is our footprint. Now, one thing I will say this, and I mean it playfully, the good thing that came out of the pandemic, two things that came out of the pandemic that I consider positive. That's Zoom and Teams. That's it. Zoom and Teams. And so we cover these counties either in person or like we're doing tonight, Zoom or Teams. All right. So over 99% of businesses in this country are considered small, over 99%. And you may ask that, you may already know why, but if you don't, because either they're based on number of employees, depending on the industry, or revenue. So certain industries is based on employee, like manufacturing. These are just examples. The manufacturing industry is based on employees. So as long as they don't exceed 1,500 employees, regardless of revenue could be 80 million, they're considered small. And the flip side, the service industry, retail, if as long as they don't exceed 47 million in revenue, number of employees could be 5,000. I'm just exaggerating, but just to give you an example of why so many businesses are considered small. All right, so the SBA now, this is consistent across the board, whether you're in San Antonio, the Dallas market, whichever city, state someone may be in, all of the SBA, all of our offices, we lean on these 4 pillars, these 4 C's: counseling, capital, contracting, and crisis. All right, so when it comes to counseling, we have in the Houston district office, we have 4 resource partners, but I'll tell you why we say 5. So we have 5 resource partners. There's SCORE, the Texas Gulf Coast Small Business Development Center, and the WBEA, if you may not be familiar, because the Women Business Enterprise Alliance, which is Houston area. And then they have 2 women business centers. That's why we have 5. And then the Greater Houston Women Chamber of Commerce has a WBC. So in terms of SCORE, the individuals that are there, I didn't say work there because they volunteer. SCORE is comprised of men and women who volunteer their time. The majority of them have retired from high-level executive positions at some corporation. Some have owned businesses and sold the businesses, and now they just volunteer their time because they have nothing else to do. No, they have that passion. And a few still work. A few of those volunteers in the Houston office, SCORE, still work in banking. I know some of those guys. So, but they volunteer, they don't get paid, and they help small businesses from A to Z. Business plan, projections, permitting, licensing, IT, you name it, they can assist, and it's all free. SBDC, the difference is they are paid employees, but the same level of service and expertise when it comes to helping small businesses, like I said, with the business plan, marketing, etc., HR. And then the Women Business Centers, their target market are women businesses, so women-owned businesses. So the WBCs, primarily they assist women-owned small businesses, whereas the other 2, SCORE and the SBDC, they can assist anyone, man or woman. So when it comes to the second C, contracting, each year the SBA works with federal agencies to award at least 23% of all prime government contracting dollars. And so it's set aside, basically. And so the 4 certifications, the 8A business development program is for the socially disadvantaged small businesses or individuals. And so that's the certification. Hub Zone, which is the historically underutilized business zone. And I'll get into capital shortly. And then Women-Owned Small Business Program and economically disadvantaged women-owned small business, veteran-owned small business, and let me see, disadvantaged veteran-owned small businesses. So those are 4 certifications. And if someone is certified, let's say a woman-owned small business, then there are set aside contracts for that certification. So what it does, basically, it minimizes your competition when it comes to competing and bidding on contracts. You can still bid on contracts if you're not certified, but now you're bidding against a huge pool of small businesses. But if you're certified, then now your pool of competition in terms of those bidding, it's minimized, reduced based on the certification. So that's the benefit of being certified in one of these areas. For more information, if you go on our website, the eligibility is there. Tons of information is on our website that can speak to that. And then as far as this presentation, please feel free to share this. Is it Rambo? Was it Rambo?
Yes, Lourdes Ramboa. Correct,
Miss
sir.
Rambo.
Yeah.
So feel free to share this with the attendees. Now, this is a continuation of contracting. So if, let's say, if someone is not sure they're ready or eligible for contracting, then Apex, they're in Houston, this office, but I think their Apex is all over. They can help small businesses determine if they're ready for contracting, what do they have to do, and if they're not ready, they can say, look, you're just not ready yet for contracting. So that's Apex, and they're here in Houston. Crisis, the third C, that is, like I said earlier, that's the only time the SBA will loan money. Sometimes the grants involved, just depends. And the proceeds can help small business owners, homeowners, renters as well. The money can be used to repair your real estate, replace your machinery, equipment, personal property, inventory. Economic injury is really revenue. So like, for instance, with the during the pandemic, a lot of thousands of businesses are impacted in a negative way because of the pandemic. That will be economic injury. So the disaster loan can help that as well. And then active duty military. But this is what we're talking about, capital. So capital, I love talking about that because my background is in finance and lending. So we're going to get into this, and then I'll pause at some point, and then I'll keep going. So the SBA works with approved lenders. We have in Houston, I know some of you are in San Antonio and Dallas. I don't have all the numbers for you guys when it comes to how many lenders are active in your market. But in terms of Houston, we have approximately 130 lending institutions that are active in our space. Now, half of those, about 70 or so, they're not, they don't have a footprint. That means they don't have a branch here in Houston. They don't have a BDO, which is a loan officer. So basically, small businesses would just apply, go on the website and apply. The other 69 are either headquartered in our 32 counties you saw earlier, or they have a BDO, which is a business development officer, or branches in our market. So that's kind of how that goes. So 69 are actually physically present. The other half is really just online, where small businesses can go online and apply. So proceeds can be used for startup businesses, competitive terms, meaning that you get a longer time frame in which to pay it back. That's the maturity, longer maturity. Less out-of-pocket expenses when it comes, and I'll get into that shortly, less out-of-pocket money, if you will, when it comes to buying equipment, or in your case, you guys have already started, so it doesn't apply. But on a startup business, the lenders are required, this is across the board, for startups, the lenders have to require at least 10% cash equity into the or down payment investment. We'll say investment into the business. So if someone is starting a business, they go to, say, Wells Fargo, they've done their homework, feasibility, and they know that it takes $100,000 to start the business. Then the bank will say, you need to put in 10%, which is 10,000, or they could say 20, depends on the bank. And that's one thing I say all the time is to get to know your banker, wherever you guys are located, different cities you mentioned. If you have money, let me rephrase that. Wherever your money is, I know you have money. Wherever your money is, I always say you may want to start off with that lender, that bank or credit union, and find out if they do SBA lending. And then if they do, ask to be introduced to the SBA lender, because where I see sometimes it's not a mistake, so to speak. It's just, if you don't know, you don't know. But when you go to some banks, like especially the larger banks like a Wells or Chase, Wells and B of A, and you share with the branch manager, if you will, that you are a business and you want to borrow money for your business. Sometimes, they don't introduce you to the actual decision maker, the business banker. They have just enough information to have the talking points to say, okay, this is what you need, and so forth. But that's just talking points. You want to make sure that they introduce you to the SBA lender or the business banker or the commercial banker. Those are the ones that know business lending, okay? I'm speaking from experience, because when I was in banking, I do know when I worked at the big banks, I would go downstairs to the branch and say, hey, here's the talking points. If you talk to someone, this is what you ask. But I'm telling you, you want to talk to the person that does the commercial lending or the SBA lending. Oh, and then the other thing, lower risk for the lenders. We guarantee, the SBA, I may come back and ask this at the end, we guarantee 75%. Okay, so where we come in addition to all the training we do and outreach, this is outreach, we consider outreach and training. In addition to that, when it comes to loans, we guarantee 75% to that lending institution in the event of a default. So let's say you go to Amegy Bank and you apply for an SBA loan, and I'm just going to keep it simple, $100,000. We're saying, okay, on day one, we hope the loan doesn't go bad on day one, but we're saying we're going to guarantee 75% So $75,000 in the event of a default, that's day one. As the balance is paid down, we're still guaranteeing 75% of the outstanding balance. What that does for the lender, it minimizes their risk. All right. So now they have a 20%, 25% exposure. So we do that to encourage lenders to do more lending. That's what that's all about. We're saying to a lender, we're guaranteeing 75% if the loan goes bad. So, you know, what's your risk? You know, 25%, you have collateral, at least some collateral. So that's where we come in with the guarantee. Now, there are cases, export working capital, there's an export working capital loan, and I'm getting way ahead of myself because some of the slides speak to this, but the export working capital loan, we guarantee 90%. All right, so what matters most to a lender? They want to get paid back. That's it. Lenders want to get paid back. Okay, so you need to show them in your financial statements, tax returns, if you've been in business, say 2+ years, and you apply for a loan, whether it's SBA or conventional. And conventional just means it's not SBA. Banks will ask you for 2 years, or in this case, 3 years, if you've been in business at least 3, of business tax returns. They want to see your historical net income, your profit number. Revenue is all good and dandy, but they look at the net to see, okay, based on your net income, and they add back certain things like depreciation and stuff like that, but they want to see, can you repay the loan based on your historical numbers. Now, you may say, well, Winston, the reason I'm getting the loan is so I can grow my business and generate more revenue. Well, if that's the case, then you want to engage like those resource partners I mentioned, or you may do it yourselves. And I apologize, Ms. Rambo. You guys may do projections and all that part of the program. Is that so?
We
Please
do,
forgive me.
yeah, the cash flow.
Okay.
We do a cash flow projection, and we also have them do the business plan that includes the forecast for 3 years.
Yeah, I'm glad I asked. I'm going to stop talking about the resource, the resource fund. Okay, so get in trouble over here. All right, so Ms. Rambo, that group, they can help you with your projections. And where I was going with that is, let's say, you know, historically the bank looks at your financials and they go, well, it's kind of tight. But then you say, well, no, Mr. Banker, you know, once I have this loan, I'm buying the coffee machine, which is the espresso machines. I listen sometimes, espresso machine. I'm buying some equipment, and that's going to help me generate more revenue. Well, you have those projections and you show that to the lender. That's what they look at. They go, okay, this makes sense. You did this prior to the loan, but once you get the working capital and buy the equipment, now, you know, or software, now you're going to generate more revenue and income. So that's where the projections will help. So at the end of the day, the lender just wants to feel comfortable that you will be able to pay them back either just based on historical performance or projected. But the projections have to be realistic because lenders, they're pretty astute, and they can look at projections and go, man, these seem really aggressive. Or they can go, okay, they seem realistic. And then also those assumptions, and I'll pause because again, I'm ahead of myself, but they want to make sure that they can get paid back. And that's what this is, what matters most to a lender. I'll talk about collateral shortly. All right, this is the most important slide. When you get this presentation, if you want to delete all the other slides and just keep this one, okay. The 5 C's of credit, what you see in front of you, that's how lenders underwrite, okay? They based on these 5 C's, and this is universal. Across the country, Florida, New York, California, 5 C's of credit. And it's not just SBA related, it's just business banking, period. So character is, make sure it's not on the slide. And in the interest of time, I won't ask you to unmute and all that, but character is your credit. That's your personal credit. Okay. That's what character is. You go, wow, that's my character. Yes, that is what banks look at, how well you pay your credit. That's character. So if you hear someone say they're basing their decision on your character, they're talking about your credit. Cash flow, that is the most important C, is cash flow. I mean, you can have the highest credit score that's out there, is 850, 800, whatever it is. But at the end of the day, if your cash flow, whether it's historical or whether it's projections, does not get the lender comfortable, the credit doesn't mean anything to them in that case. But now, if your cash flow is good and sufficient, then of course your credit's going to play a huge role. But I don't want not to dismiss your credit's important, okay? But all I'm saying is, if you have a 800 credit score and you go to see a lender and you've been losing money every year, then the cash flow is very important, okay? And some you say capacity is kind of interchangeable. I say cash flows, some say capacity. That just means your ability to repay. I'm coming to collateral last. Let's go to conditions. Conditions would be things like the condition, the terms of the loan. What I like to talk about really is the industry that you're in, competition, all of that falls under conditions. And so when you're talking to a lender, one of the things they're going to ask you is who's your competition and what makes you different than your competition. So those are the type of questions. Industry is something that sometimes small businesses, let me put it this way. So when it comes to industry, your industry is important, but not only your industry, but who's your client? If your client is in a volatile industry like the oil and gas, nothing against the young lady that mentioned oil and gas investing. So I didn't mean it that way. But anyway, if your source of income is coming from an industry that's considered volatile, up and down, uncertain, well, then that's going to play a role as well in the decision, not just your industry. You could be in the a machine shop, you know, and your machine shop is doing really well. But if your client base is all businesses that are in a volatile industry, then yeah, lenders will get somewhat uncomfortable. So I just thought I'd share that with you. So be prepared to talk about that. Be prepared to talk about how will you pivot? A lot of businesses during the pandemic, I mean, it's incredible how many businesses pivoted. I mean, they were doing one thing and they decided, hey, we got to be smart. And they started pivoting. And I think some restaurants started doing home deliveries and things like that. So you just be ready to have a conversation with the lender that if this happens, this is what we plan to do. Capital, that's your equity injection. I mentioned the 10% earlier, that's capital, that's your equity. When it comes to buying equipment with the SBA backed or SBA guaranteed loan, lenders will ask for less out of pocket, like down payment towards equipment purchases because of the SBA guarantee. Now, collateral, I'll come back to that one on another screen. So character, again, that's your credit, that third bullet point. And I forget a lot of times I have all these slides later. I just start talking. But anyway, your credit, that's your character. Okay, I can talk about the other. Oh, banking relationship. Let's talk about it. Banking relationships are very, very, very important. I cannot stress that enough. So, if wherever your money is now, you're satisfied, you have feel good about it, go ahead and even if you're not looking for financing today, but go ahead and ask to be introduced to the banker, commercial banker or SBA, and just start having a conversation with them about your business. Say, look, next year I may need financing, but I want you to understand my business. So then when you're ready, they understand your business. So you want to start having that conversation, building that relationship with the banker, professional relationship that is. And I say that in a joking way because some people may think I meant personal, hang out. No. Although I do have some businesses that I financed 20 years ago and we're friends now. We do stay in touch. And so it's amazing how things happen. But the other piece, though, is make sure that you handle your depository relationship or your deposits, your checking account. Make sure that, you don't want to be overdrawn. I mean, things will happen, but you don't want to find yourself on the NSF, N as a non-sufficient fund report. That's what the banks pull up every day. And they look to see who's on that report. They make phone calls. Hey, you're on the NSF, meaning you overdrawn. You need to make deposit. You don't want to be on that report, at least not on. I mean, something happened. You're on there one time, but lenders do factor that into their decision. Okay, they will. If you're going through the bank where your checking account is, they're going to pull that relationship. I call it relationship. Pull it to see how well you maintain and handle it. So be mindful that does play a factor as your banking, your depository relationship. Cash flow, I mentioned that is the number one. I used to do a presentation back in the day when I was in banking called Cash Flow is King, King, because it is. Because at the end of the day, regardless of collateral and credit score and all that, at the end of the day, lenders want to get paid back from the business, the cash flow, not from liquidating the collateral and all that. They want to get paid back from the cash flow or capacity. Collateral, I'll pause and talk about this one because I was holding off till later. So when it comes to the SBA program, I mentioned that we guarantee 75%. Oh, the maximum is $5 million. Forgot to mention. The maximum loan amount under the 7A, and the 7A is the most popular program. The number 7, A as an apple. The 7A loan program, maximum loan amount is 5 million. It can be as low as $1,000, depends on the bank. We guarantee 75%, as I mentioned earlier, and if it's export working capital, we go to 90%. But the purpose, one of the purposes of the SBA 7A program, at the end of the day, is to mitigate weaknesses in collateral or insufficient collateral. That's really what it's for. I mean, it's for all the other things, longer amortization, all that, less out of pocket. But at the end of the day, those 5 C's that this is the 5th C. The other 4 C's that I spoke to earlier, if all of that is fine, your personal credit is okay, cash flow is good, and conditions and all, but collateral is the only weakness, and I say it that way, if collateral is the only weakness out of the 5, then the majority of the lenders will still approve that loan with the SBA guarantee, because that 75% guarantee mitigates the weakness in collateral, because they get 75%. Let's say 100,000, I said that earlier, 75,000 guarantee, 25,000 exposure. If the collateral is worth 50,000, they don't really have that much exposure. So that's why the SBA guarantee program really it exists for that reason, to help small businesses in terms of insufficient collateral, lack of collateral. It's not there to mitigate losses. Like if a business is showing losses every year, it doesn't mitigate that. If a credit score is 550, it doesn't mitigate that, but it does mitigate weaknesses when it comes to collateral. Okay, I'll pause now. Any questions before I go any further? Anything that I said that I can clear up? You won't hurt my feelings, just ask me. Good.
So Winston, I know that last week I don't see it on the chat, but last week somebody asked about why do lenders, and you probably are very knowledgeable about this, why do lenders base a business loan decision on my personal credit? That was one of the questions that one of the ladies asked last week.
Thank you for that. You get an A+ for that question. And that is a question that comes up. Really seriously, every time I do I moderate a lot of panels, finance panels. But anyway, to answer your question, so believe it or not, lenders base their decisions on your personal credit. They don't even give you example. I had I was in banking 25 years. Only one time did business credit come up, and I didn't bring it up. My underwriter brought it up and said, "Hey, we like this deal, but the business credit." I said, "What are you talking about?" I said, "The gentleman's credit is the highest it can be, 700. His business partner cash flow is strong." So this particular underwriter just got caught up in, I don't know what they call it. They pulled the business credit, and I think he had a slow pay or something. But to your point, no, yeah, banks, lenders, they look at your personal, because I'll tell you why. You have to guarantee the loan. I haven't gotten there yet, but I'll speak to it. So anyone that owns, and this is not just SBA, it's just banking 101, commercial lending, whether it be SBA or not, anyone that owns 20% or more of a business will be required to personally guarantee it. So that's where that credit score is so important, because you're guaranteeing it, and they want to see what your credit looks like, and if you have been paying your bills on time. So your personal credit is the credit that would be looked at. I cannot think of, like I said, 25 years, one time in my experience, and even now when I do panel discussions with lenders, that question does come up, and they all say the same thing. No, we look at your personal credit. So your personal credit is you, and so that's what they're looking at. Now, one lender, believe it or not, I moderated a panel last Thursday, and out at the Port Houston. I said, you guys are other parts of the Port Houston, and one of the lenders out of the 5 on the panel, he said that his company, it's not a bank, it's call it a non-bank lender, but it's a commercial lender. They do look at the business credit. I was surprised. I was shocked. I said, wow, I didn't know it. But yeah, majority of the lenders look at your personal credit. That's what they're going to base it on. Did I answer your question? Okay.
You did. I think it was Amy who asked that question, because she was trying to do something on the brick and mortar side of things. And obviously the lender was saying, it's your credit that I need. And so she was saying, well, I have 3 years of business data. I have 3 years of financials. I've been in business. Why is in the I have a separate account. I have a credit card for the business. And so her inquiry was around why. And so we gave sort of the same answer you gave, but it's, I think, often good to hear it from somebody that has lived that, like yourself.
I had I mean to cut you off. I had when I was in banking, it was years ago, and this person, small business owner, called me at the bank and said, "Hey, Winston, I want to develop. I say develop is the word. He wanted to, I can't think of I say develop, but he wanted to establish. He wanted to establish business credit." And I said, "Well, why?" I explained. I said, "Why do you want to do it?" And he said, "Well, because I want to get ready for, applying for a loan at some point in the future." And then I said, "Okay, well, how's your personal credit?" "Well, I got that." "Well, no, let's talk about it." So anyway, the person had some hiccups, blemishes, and I said, "Look, forget about the personal business credit. Work on your personal credit." I said, because that's what lenders will be looking at. And he appreciated it because he really thought he needed to start establishing business credit and that banks wouldn't look at his personal. I said, "No, your personal credit is what they will look at." And that's across the board, credit unions, banks. So yeah, that's just so yeah, as I mentioned, one time out of 25 years for me. And now today when I have lenders on panels, they all know personal credit, that's it. So I hope that helps some. Now I will say this though, on that same topic, and again, I know you all are in different parts of the state, if you will. But in Houston, and I know it's in San Antonio as well, we have two, we call them micro lenders, People Fund and Lift Fund. I know they're in San Antonio, but they may be in Dallas as well. I'm not sure. Okay.
They are. We have them here as well in the Dallas Fort Worth area.
So
Yeah.
People Fund, I'm sorry, let me cut you off. So People Fund and Lift Fund, they will go as low as 600 on credit scores. And so that's out there. And, they do micro loans and they have another loan program they do under the 7A, but they can go as low as of 600 and in some cases 590. So when I'm talking to the public, I do let them know, look, there's hope, just because someone, credit score may not be as high as they would like for it to be. There are lenders out there that still will look at deals like that. So any more questions before I kick it back
I
up?
don't see any on the chat, so you're free to continue.
All right, let's see. Capital, going past that, conditions. See, I talked about that. Okay, so SBA, here it is. Okay, so the loan proceeds, talked about starting, growing, expanding. So just kind of this just kind of speaks to that again. You can use the proceeds to start a business, grow your business, buy a business, open a second location, leasehold improvements, working capital. Young lady mentioned oil and gas, software, working capital for your software. Renovations to the facility if you own it and you want to renovate it, you use it for that. Or like I said, leasehold improvements earlier. Inventory. I want to talk about this land and building down here for a second. So, and I've been saying I'm going to change that bullet point and just say building real estate, because sometimes when people see they go, "Oh, I can buy land and hold on to it." No, you can't, not with the SBA. So basically what it's saying is you're buying a building for your business and you have to occupy. Your business has to occupy at least 51% of the square footage for it to be eligible. Otherwise, if it's less than 51% occupancy, it's investment real estate, and which is not eligible for SBA, that is. So if someone wants to take advantage of the SBA loan program and they want to buy, building or for their operation, that business has to occupy when the loan closes at least 51% of the square foot, at least 51% of the square footage for it to be eligible. Now, if someone identifies, excuse me, a retail center, strip center, in most cases, one would think, well, that's certainly investment. Well, if let's say you have I was trying to remember one of the business the coffee company, young lady. Let's say the young lady with the coffee business, espresso, she identifies a building or she sees the strip center down the street, retail center. As long as her business occupies 51% of that square footage of that strip center or retail center, she can lease out 49%. So that's the key, 51%. Okay. So I thought I'd share that with you. Now, if someone is interested in buying real estate, like flipping houses and all, that would not be eligible for SBA, but there are lenders that finance that conventional. I did it in my previous life. So it's a matter of understanding what lenders are doing. So I always want to leave you with this. Just because the business or the purpose of the loan may not be eligible for SBA financing, banks do conventional, which is non-SBA, and they finance churches, nonprofits, and all. It has to be a for-profit also. A for-profit it cannot be a nonprofit or a not-for-profit for SBA, but there's conventional financing. Okay. Export working capital. If someone is in the export business, we have an export working capital loan program. It's also a 7A, and we guarantee 90% in that case to the lender in the event of a default. Now, again, as I was telling you earlier, I was already ahead of myself on certain things because I already know what's on the slides. All right, so the 7A loan program I mentioned earlier, we guarantee 75%, maximum is 5 million. The SBA Express, we guarantee 50%, that's still 7A, and the max is 500,000. The difference is not just the loan amount and the percentage of guarantee, but the 7A, the general 7A is a term loan only, like you're making principal and interest payments every month like you would on your house or your car, okay, term loan. Express can be a term loan or it can be a line of credit, okay? It can be a line of credit. So that's the only product we have. Well, we have another product, but it doesn't pertain to this, but excuse me. But it can be a line of credit. And then the export working capital is a term loan as well, 5 million in the 90% guarantee. Now, microloans, let me stick to that right here. I don't know if you can see my little thing, but microloans, I mentioned earlier, People Fund and Lift Fund, those are two micro lenders. They're called Certified Development Financial, CDFIs, Certified Development Financial Institutions, CDFI. So we have those two, People Fund, Lift Fund, that are active in Houston. There are some other CDFIs that are not approved SBA lenders, but they do small loans. So I'll just say, not that you have to be careful with it, because if they're doing financing and they're legitimate, that's all good. But we only have two in the Houston and Dallas. I'm not sure how many they have there. I think True Fund, that's another whole story. I'll keep up there. Okay, so People Fund and Lift Fund are the two micro lenders. They go up to $50,000. Credit score can be as low as 600. They take more risk than lenders. They're there to fill that gap. They are there to help businesses get access to capital so they can grow and become bankable. So they fill the gap. They are mission-based, mission-oriented small lending institutions, or organization. So they do a lot of good things in the community for small businesses who are having a hard time accessing capital. Now, their interest rates are higher. I was like slightly higher, but they are higher on the interest rate because they take more chances. So that's the SBA micro loan program. I won't spend too much
I was going to add that in the North Texas area, there's also ALCAP. I think they're, yeah, and they're SBA backed. And there's also one more. I'm trying to Dream Spring.
Yeah, Dream Spring is here.
It's based out of they're based out of New Mexico, but they're also here in North Texas. So they're all micro lenders. And as Winston says, their requirements are a little bit less stringent than a traditional banking or financial institution.
Now, the thing with DreamSpring and AllCap, I know both. So in Houston, that is, I can't speak to Dallas, but DreamSpring is, they don't do microloans in Houston yet. They just haven't signed up for, because they have to be approved by DC, our headquarters, to do microloans, because they have to actually request to be able to do microloans in certain territory. So they haven't done that in Houston. They do the other loan, which is 7A, up to 350,000.
Right.
So they do SBA, but they don't do microloans yet, not in Houston. But I have them on my panels all the time. Tony Johnson, she's in Houston. So I have DreamSpring on my lender panels all the time because I love what they do in terms of just lending in general. AllCap, we have a young lady here in Houston, but again, they're not, well, you're in Dallas, so that's a whole different market. But they're good. All of them do a great job. So I'll pause there because otherwise the market's a little different in terms of their approval, what they can do here versus in other cities. But they do a great job.
I would like to say that they exist, like to your point, they exist. And so if you are looking for access to capital sources of funding, they're also worth exploring and understanding what their requirements are and what they can offer, right? So in addition to what Winston is sharing with you all here, it's also good to know that those micro lenders or those CDFIs exist, because the CDFI's whole goal is to help prepare you and help you develop good credit habits and get you on the right track to get you to the point where somebody like Winston, when he was a commercial lender, can then in the future get you to where you need to be from a funding standpoint. Rebecca has a question, Winston. Go ahead, Rebecca.
Yeah, I had a question about oil and gas lending. I know this is specific to this industry, but my understanding is that banks typically handle the volatility by hedging the oil and gas prices, which you pay for, and it limits the upside but protects the downside. And that they would give what they call an RBL, reserve-based lending loan. And that's based on existing production. And you can stretch how much they give you based on how much you can personally guarantee. And I haven't done this yet. This is just based on my research. So my question is, how does that relate to SBAs in general? And are there any alternatives, in this situation to RBLs? Like, if you don't have production yet, or you don't want to hedge, what would other options be? Could I just, get a line of credit some other way? I was just curious what you know about that.
Yeah, I'm speak to it this way. So in my 25 years, I worked at banks that had oil and gas lending groups and so forth. SBA wise, I'm going to say it probably wouldn't be eligible because it's speculative. I mean, the oil and gas industry. I have never seen an SBA loan since I've been with the SBA and when I was in banking go through as go through the SBA loan program. However, when I was in banking, some of the larger banks I worked for that had the oil and gas, they would do the finance. They specialize everything you just mentioned. We're like, what is she talking about? No, I'm just joking. But no,
Yeah,
no,
sorry. I know it's a very niche area.
no, it is, and so that's the one area I never did get involved in for whatever reason. But yeah, so you would certainly want to speak with a bank or a credit union, but more than likely a bank that has an oil and gas lending. Amegy Bank, I'm not endorsing, I can't do that, but no, I worked at Amegy years ago, and so Amegy, I know they have an oil and gas lending department. Some of the other banks, larger banks, have that. Those are the gentlemen, men and women who specialize. They know the market, like you just said earlier, everything you just described. But it wouldn't be under the SBA. Now, I will say this though, I heard you mention earlier when you introduced yourself about the software. Now, if you wanted to get financing just for buying the software, not working capital for oil and all that, no, just for buying the software, right? Working capital piece, that probably could be SBA because you're borrowing money just for the software, but not investing or anything else when it comes to oil and gas. So more than likely, quite honestly, Rebecca, if I can call you Rebecca, you really would want to speak to a bank, their oil and gas division, because those are the guys that really specialize in that area.
Okay. Yeah, that makes sense.
Okay, because it's a special niche. It is a special niche. It really is, and that's really why I would always refer my deals when I was in bank. Hey, oil and gas, here's a deal. But no, that's good that you're in it. But yeah, I'm trying to think. Would it be anything else in SBA now that export work cap? I don't know. I think you'd be better served just going like the oil and gas type of division.
Okay. Yeah, no, that's a good point that it could apply separately to just like software or something else.
Right. Keep that in mind, that part, the software package. And again, on the software, let's say if you were to go that route of financing just for the software, the lender, of course, everything I just mentioned, projection, all that would play a role, in their decision. But yeah, hope I helped a little bit.
Yeah, no, that's great. Thank you.
Okay. And then is it Lord, Miss Ramboa? How you pronounce your first name? I'm so formal asking Miss Ramboa. What is pronounce your first name?
Lourdes, like Lord is. The Lord is. Yeah, that's the easiest way to remember it.
On the CDFIs, I'm glad you mentioned what you mentioned. Yeah, CDFIs, our markets are, I say different. Some of the CDFIs here are not, they are vice versa. And like True Fund, I want to say True Fund is up there with you guys. They're here, they don't do, and again, I'm not here trying to say don't go, but certain lenders have been approved to do SBA in certain markets. I know True Fund, I think they've been approved to do SBA in Dallas because that's what they chose to do. They haven't filled out the paperwork to do that here in Houston yet. Although I know the young lady very well, and I'll include her on panels just to help her out and get her exposure. But yeah, I just thought I'd bring that up. But yeah, CDFIs is a good way, a good source of capital. All right. Anything else? I'm going to start back. All right. I want you to go home. All right. So 504 loan program. That's real estate, primarily just real estate. Even though it may have your equipment, the equipment has to be major, heavy equipment, cranes, machine shop type of stuff, lathe machines. But usually in my 25 years, when I did 504, it was all real estate, owner-occupied real estate. I mentioned the 7A loan program. The max is 5 million. This can go to 12.5 million. So it could be larger real estate. If you want to buy a building worth 10 million, this is the way you would go with the 504. Now, the difference is you see right here, 50, 40, 10. There's a 50, 40, 10 structure, meaning that let's take $1 million project building and someone wants to buy a building for $1 million. So the lender will do the first lien, which is 50%, like say a bank would do 500,000 of that. The Certified Development Corporation or company, CDC, which is backed by the SBA, would do 40% or 400,000 in this case, and then you come in with 100,000 equity injection. Now that 40%, the interest rate is fixed for the entire time. So usually a 504 is going to be a 20 or 25-year term. So if it's 25 years and the rates of 504s is about 5 point something, it's less than 6, then that rate will be fixed for 25 years, won't change. So that is the benefit of the 504. You have a deal where you have a fixed rate at least on 40% of that loan. So that gives you somewhat some comfort knowing that. And then, like I said, 10% out of pocket. It can go to 20% where you see at the kind of right-hand corner at the bottom. The equity could be 20. In that case, what happens if it's a single or a special purpose property, like I use the example of I'll say bowling alley. A bowling alley is a single purpose. And so if it's a startup and a single purpose, now you have to put in 20%. So it'd be it'd be a 50, 30, 20 split. All right. Microloans.
I have a real quick question about that 504 loan. You mentioned land and building. Would that apply to like leased office space?
It has to be owner occupied. It has to be owner occupied. Yeah. So anything SBA, the business has to occupy at least 51% of the total square footage of the building for it to be SBA eligible.
Okay, and so but it's okay if it's leased versus owned.
No, that's a good question. No, you have to own it. So
you have to own it. Okay,
yeah,
gotcha.
Yeah. Now I'll say this though. So let's say just example, you want to buy a building, and you say, oh, once it's have to occupy, the business has to occupy 51% of the square footage of that building. You can lease out the other 49%.
Oh, I see.
But you have to own the building, but you have to own the whole building.
You have to own essentially 51% of it. Gotcha. Okay.
Good question. Thank you. Microloans, talked about that. I mentioned how they're mission-oriented, community-based, flexible credit requirements. They really work closely with their borrowers. The other thing they do is technical assistance. Let's say if someone does have some credit issues or credit challenges, they have technical assistance they can bring to the table to help someone to improve their credit. So they bring a lot of value to the table, and they serve the underserved. That word underserved has changed a couple of times. It was underserved, then we started calling it underestimated market, and now I'm hearing the word under-resourced. So that's just words coming from DC. So under-resourced. All right. So it's almost done here. See? All right. So this is, I think, this is next to the last slide. Just be prepared. Banks want to help. Lenders really do want to help you. They really, really, really do. I'll just share this with you if you didn't know it. Lenders have goals to reach. So goals meaning so many loans they have to do, so many dollars they have to loan out, so many deposits. So they really do want to help small businesses, and not only for that reason. I loved helping small businesses, but they do want to help. So just be prepared. Know your business. They're not expecting you to be a CPA and calculate ratios and all. They just want to know you know your business. That's it. That's all. Business plan, if you received assistance on your business plan, it's still your responsibility to know what's in the business plan. Because the lender will ask, again, they're not trying to ask gotcha questions or trick questions, just basic, why did your business have a decline in revenue last year? If you can't answer that question, then that's a concern. Who's your major competition? If you can't answer that. So they just want to know you know your business and you know your industry. That's really it. Full disclosure, be transparent, don't hold back because they'll find out. Because they will pull your credit at some point. I will say this though, before you sign an application, make sure you're comfortable with that lending institution. Ask those questions about what their credit score requirement, what their interest rates are. Have they ever financed oil and gas industry or the different industries I've heard you guys mention? Ask those questions, because if you talk to a lender and he or she says, well, that's not an industry we really get comfortable with, then you want to talk to another lender. You don't apply, because once you apply, they have to pull your credit. It's mandatory. It's fair lending. I mean, they have to pull it. So before you sign the application, make sure you're ready. And then those resource partners I mentioned who are around the country, I know scores around the country, SPDCs, they can also give you some good, I'm sorry, I forgot. Lourdes, you guys do that, don't you? Okay, so she can help you with that. She can give you, like she just mentioned earlier, with the different CDFIs, she already knows. She was good. So she can give you guidance on the lenders out there, what they do, what they don't do. So you're in the right place right now, going with Lourdes and the TWU. So you're in the right place, again, just full disclosure, and then don't forget the relationship part of it. Start having conversations with the lender now. Oil and gas, questions you ask me, start having those questions, having those conversations, because at the end of the day, when you're ready to apply, believe it or not, those lenders will stay with you, they will grow with you because they want to see you grow. And so you really want to have a relationship-oriented lender and not a transactional. Transactional lenders are those that just order taking, bringing in an application, and then moving on to another deal. Relationship, they want to know your business. They want to stick with you from day one until you decide to sell the business or retire. So keep that in mind. This slide here is once you get this PowerPoint presentation, I believe you can click on these links right there on the spot. And this one here, now you're in Dallas, but so Dallas has their website that you can go on. And once you go on their website, there are a list of lenders in that market. This is the Houston lenders. We have what we call the Houston Association of Government Guaranteed Lenders, which are SBA lenders. I believe they have I know they have a similar organization for Dallas. We have a website. On our website, you can sign up for emails, and then you'll receive our emails that go out weekly to talk about the different activities we're involved in. Resource partners, that talked about that earlier, and then the lender match. You can go on that link on any district office website, and you can type in your information, the industry you're in, how much you want to borrow, and there are about 1,800 lenders nationwide that participate. So it matches you up with their criteria, and then it sends you their contact information so that you can reach out to the lender of your choice. That's the contact info. Oh, well, I forgot you guys in Dallas. Sorry about that. The contact information if you're down here. All right. But they have the same thing in Dallas. Again, this is Houston contact information, but that's the last slide. I got you done in an hour. So, hey, we did it. Any questions? Anything I can clarify? Anything? I'd love to clarify. We'll try to. And Lourdes, you can share you have my contact email. You can share it if you want to with everyone, and they can feel free to, if they have questions, to email me. I know they're in Dallas, but I can always, we help everybody. It's all about.
Yeah.
Mm-hmm.
And on the
they're not all in Dallas.
No.
Oh, San Antonio. I'm sorry.
Yeah.
San Antonio and Argyle. Was it Argyle? Somebody said Argyle?
Yes.
Yeah.
Where's is that near what?
It's near Denton.
It's near Denton.
Okay, Denton. That's Dallas. Okay, Dallas. Okay. Good friend of mine.
So I also put in the chat the Apex Accelerator. So if you're interested in that government contracting that Winston spoke about, as well as the procurement center representatives for the state of Texas that you reference, Winston, as well, I put that there. That's all in the chat, as well as the listing of SBA lenders in Texas. So those are the lenders that are already approved by the SBA to do their 7A loans, so or other lending as well.
Yeah. Yeah.
So anyway, so that's also in the chat for everybody. Any questions? Remember, Winston also brings a lot of experience from that commercial lending side, so he understands the banker side as well as the SBA section side. So if you have any questions related to that access to capital from that perspective, from the
I have a
banker's
question.
perspective.
I'm sorry.
Anitra, I see your hand up.
Oh. I think
No,
she's
I was actually giving a shout out to Winston, to Mr.
okay. Winston's good.
Winston, to Winston.
Thank you, Anitra.
It was a good session. Thank you.
Thank you so much. I appreciate it. Amy, how much is that machine, that coffee machine you said you want to borrow money for? It must be a huge, not a huge, but a very expensive machine, espresso, I think you said.
Well, I'm not getting a big one. Like the one in Starbucks is probably about 25,000.
Is it really?
I'm just getting I mean, expensive to me. I think it's like around almost 8,000.
Okay.
Yeah, not Starbucks quality, like, corporate
Right.
money, but it will definitely help. Yeah.
Yeah, the micro lender, Ladez, that's certainly the route, and Tracy, that she may want to go with. Usually when I talk to someone and I ask that question, then once they say it was whatever the dollar amount it is, I'll go, well, yeah, lift the CDFIs will be a good route. But I was just curious. I'm a coffee drinker, so I was just curious. So, okay. Well, thank you. Appreciate it.
Thank you for the information.
Sure.
Anybody else? Any other questions before I let Winston go on and join his family for the rest of this evening?
All good. All good. Walk my dog. I have to walk the dog.
All right, sir.
An
Well,
important
thank you
job.
so much. We appreciate your time. We appreciate you sharing your knowledge, both from the SBA perspective and from your commercial lending perspective. It was really informative, and you offered some really good information. And as Winston said, we will share, just like we did last week, the resources and the replay. So the PowerPoint will be there as well. So
All right. Well, thank you so much. I
thank you,
really enjoyed it.
Winston.
Thank you.
We appreciate you.
Appreciate
Thank
you all.
you for
Thank
being
you.
here.
Sure. Thank you.
Thank you.
Thank you.
All right. Take care of yourself.
All right, ladies. Well, we may have a few things for you then. So I did send out. So now I went blank on which one. I just sent another. How many of you have gotten your live plan?
I just got the email today.
Right. I
But I
just
haven't. I
did
haven't.
that while
Okay.
we
Oh, thank
were
you. I
on
did
there.
get it. Yeah, but I haven't done it yet. But I did see that come through.
Okay, perfect. Anybody else? Did you get yours? Did y'all get yours or not?
I did. I've started filling some out.
Okay, perfect. I just want to make sure, because if you haven't logged in, it'll make you inactive and we'll have to redo it. But sometimes too, you have trouble finding it in your email. Anitra, do you remember how that came? Did it say live plan? The link? Do you
I believe
remember?
it did. From what I
Okay.
can remember, it did.
Yes.
Okay. Does anybody else need that resent? Okay. Do you have any questions in general about the grant? Okay. Well, good. Well, we've enjoyed seeing you all again tonight. Lourdes, great job you did here with all of that and the questions. Sorry if I interrupted on some or we started at the same time. Ladies, great to see you. That's all for tonight then.
We'll be back next week.
Yeah.
And next week we will be covering cash flow, simplified cash flow statement. And that's a really important component of our grant. But also, as you heard Winston speak, that is something that at any point, if you are seeking funding of any source, you're going to need to have something similar to that prepared and ready to show. And also to manage your business on a regular basis. I mean, cash is king. Cash is what you need to really focus on, because it's great to have a P&L and the P&L say that you have generated so much in revenue. But if that revenue hasn't come in yet, you don't have cash in the bank per se. So understanding that component is really important. And for some of you, it'll be even more important than for others, but it is important for everyone. But next week, we will have Christina walking us through the simplified cash flow statement, because that will be a required submission for all of the grant awardees.
All
So
right.
that is all we got.
All right. Well, everyone have a great evening then. Rebecca, do you have a question or are you just saying goodnight?
Oh, yeah, no, I was just going to say thank you.
You're welcome. Thanks, y'all, for being
Thank
here.
you
Have
all.
a good evening. And we'll see you next week.
Take
Thank
care.
you. Good night.
Good
Good night.
night.
Oh, it's Natalie. Hi, Natalie. Hey, girl.
All right, I'm going to stop the recording.
That's good. Yes.